What is up, YouTube? Welcome back to Stocks by the Numbers. We have a lot of earnings coming out today, and I know we have about 40 minutes to go before the close, so I'm going to try to make this really quick and upload it because I just went through a handful of companies reporting earnings, and the video was almost an hour and a half long. So my apologies because I'm coming to you late, but I wanted to put this out here. First company I'm looking at, Marathon Digital Holdings, ticker symbol MARA, MARA here on the NASDAQ. There's a Bitcoin miner. Obviously, it's been absolutely raging with the price of Bitcoin. However, we look and we can see that the company, for the most part, has been missing earnings time and time again. And in my opinion, obviously, it's getting pumped up with the price of Bitcoin, but the business itself is not growing and reflecting the increased value of Bitcoin. Otherwise, they would be annihilating earnings estimates, and they'd be growing and going on to bigger and better things, but the company keeps getting rewarded. I appreciate the fact estimates are now up to 148 million. However, even at that price, extrapolating that times 4 quarters, we're talking about sub 600 million. Company having a market cap now close to 7 billion, losing $3 a share here. And again, even though revenue has been climbing here over the last couple of quarters, in my opinion, I think it's overvalued. I would probably go with Mara puts, in my opinion. Next company up, Snowflake. Very similar situation here. I appreciate the fact that we're seeing consistent growth here. Market cap about 76.3 billion. Ticker symbol again SNOW here on the New York Stock Exchange. $231.80 a share here. 76.3 billion. Company somehow also losing almost $3 a share, as we see doing very well on the EPS side for the last 4 quarters in a row. Look at that growth. The one red flag that I see, though, is see back here, they brought in 557, they lost 200 million, and now here they brought in 734, they lost more than 200 million. So in my opinion, I actually think that is a very bad sign. And if we look over here, we can see that for last year, I know they're going to wrap up 23 here, but for last year, the company brought in 2 billion. Even if we call it 3 billion, we can see that the company, the market cap, is at an insane multiple, in my opinion, compared to the yearly revenue that the company is actually bringing in. And apparently, no matter what they make, they're going to lose 200 million a quarter. In my opinion, I would go with puts on Snow. This one here, Salesforce, ticker symbol CRM, listed here on the New York Stock Exchange, almost $300 a share, trading near highs, 289 billion. The PE very high, north of 100, but if you go back, look at the numbers, you can see it was up at 800 at points here, and the stock continued to climb because of that consistent growth. It's the consistency, and we can see that consistently beating on the EPS side, with estimates coming in even higher. Look at this growth here year over year, cannot be denied. Phenomenal growth. I understand the profitability took a hit as of last quarter, 31.3 billion revenue coming in. For this quarter, you're looking for that jump up to the next milestone level there of north of 9 billion for the quarter, and that would close out the year 8, 16, 24. We'll call it 25 and a half plus 9. Yeah, that'll be like 34.6, almost 35 billion, which again would signal about 10% year-over-year growth in revenue. And in my opinion, if any company is going to trade at a higher multiple, it's going to be one like CRM that basically consistently comes in above expectations, consistently keeps growing, and consistently keeps getting upgraded. In my opinion, I would go calls on Salesforce. Here, switching over to AI. Ticker symbol AI, C3AI, listed here on the New York Stock Exchange. Stock sitting here, we'll call it 29.75. Someone asked me, it was back here like September 7th in Discord, I looked it up. Someone asked me around 28, oh, would you buy it? I said, in my opinion, I'd wait for a sell-off. I'd wait for a pullback to the low 20s. As you see, that's exactly what it did. Came down, bounced around that 23 level, ran back up to north of 30, and has now since pulled back. And if we pull out, we can see that basically since the beginning of 23, the stock went from this bottom up to these extreme highs when everyone just bought AI stocks just because they were in the AI sector. And now you can see we're in this downward consolidating channel, but overall we're in the symmetrical triangle. And in my opinion, 3.5 billion, of course, on a company losing money. Coming in above expectations for the last 4 quarters straight on the EPS side. The revenue has been growing nicely. Looks like we kind of flattened out here a little bit, seeing slight growth here year over year. And apparently now we are losing about $1 for every dollar that we're making. Even on the quarterly side as well, you can see net margin percentages sitting on average around 90+%. So again, they're bringing in 70 million and change. It's going to cost them 70 million and change. 76.1 million estimates coming in. This is the most going back the last several quarters. But again, if they're going to lose 75 to bring in that 76, in my opinion, it just doesn't seem good in the short term. And I would wait for a pullback at a more attractive price, again, in the lower 20s minimum, in my opinion. And I would probably say puts on AI. Next company up, AMC, of course, everyone's favorite movie theater company. The last 2 quarters, the company actually came out with some decent numbers. As we see, nice beat on the top and bottom line. And the EPS side really turned around here for the last couple of quarters. As you see, this was the last time I made a video at around $7+. A couple of the children gave me dislikes because they're emotional. And then, of course, the stock dropped about 50%, as we knew was probably going to happen, which is what always happens after a reverse stock split. So obviously, I was right on that one, but we have a market cap here, 1.28 billion. Company losing almost $4 a share. Again, very nice the last 2 quarters, but we can see also, look at the revenue here, was sub-billion, struggling with negative net margin. Then we're jumping up to 1.314 billion, and now look at estimates, back down to slightly above 1 billion. But in my opinion, I think actually the EPS side may outweigh the revenue side on this specific situation, strictly because of the debt that the company is holding on their balance sheet. We looked at it last time. The debt is around like 9.5 billion, and the company market cap 1.3 billion. So you can see also the company came out with a surprise EPS positivity, and now look at these estimates, expecting a loss back down to about 70 cents a share. AMC is one that, again, we could have the potential to get some surprise numbers, and we could explode up here 70% back to this $7 mark, but I personally wouldn't have high conviction doing so. So in my opinion, I wouldn't even play AMC, let alone calls or puts. But if you really forced me to pick a side, in my opinion, I would say it's probably going down, not up. Switching over here to IonQ, this is a quantum computing company that, of course, I said back in the day was overvalued, and it rallied for absolutely no reason, in my opinion, and now it's pulling back and selling off down into this little consolidated channel. We could make the argument of a potential symmetrical triangle lining up here, and in my opinion, it should break down. It shouldn't break up. We can see that going from when the ball dropped here in 22, this stock went from $3 to $21, literally for no reason, just because the children got it trending. And I appreciate the fact that the company's bringing in like an extra couple of 100,000 every quarter here. You can see stepping up 4.25 million, 5.5, little over 6 million. And the EPS side has been absolutely horrendous, as you see. Losses widening and the company missing big 3 of the last 4 quarters. But look at revenue coming in now, back down to sub 6 million, 5.76. Even if they beat this and post 6 million, in my opinion, the stock is massively overvalued. You're talking what, 25 to 30 million for the year in annual revenue? $2.25 billion market cap. I don't care what anyone says. See this whole massive run that, in my opinion, shouldn't have happened at all? That's now going to probably lead into a massive sell-off that people are going to cry about. But in my opinion, I think it's 110% justified. I think it's pulling back here longer term. In my eyes, this is a $5 stock. That's just my opinion. I would go with IonQ puts going into earnings. Monster Beverage reporting. This is a company that obviously is on the up and up and basically is still forecasting future growth moving forward. 58 1/3. The company's holding, I believe, almost $2 billion in cash. We have a PE of about 38. 2 beats, 2 misses the last 4 quarters. Look at this growth here. Just consistent growth in revenue and even the profitability consistently climbing with it. That, in my opinion, is a healthy business model. I appreciate the fact that net margin percentage took about a 12% hit from 20 to 22. However, the revenue increased almost 50% during that time frame as well. So any losses or any increase in costs probably, in my eyes, seems to be offset with the increase of revenue coming in. And obviously the company's holding steady, looking for about 1.75 billion estimates here to come in on Q4. You can see last time Q3 revenue dipped down from Q3 to Q4, but in my opinion, I would probably be a buyer of this company. If we look at the valuation again, brought in 6.25 billion. That was for 22, so we're going to be close to 7 billion, right? And what we say, 2 billion in cash almost, so that's like 9 billion off the top of my head, and we have a market cap of 58.25 billion, so that is what, 6.5 times that like total value number, I'll call it, in my opinion. And in my opinion, that is actually undervalued, even though the PE is high. And if we do have a pullback again, we can see maybe about 52 and a quarter back towards this trend line, maybe even about 51 and a half. But in my opinion, if I liked it at 56, I'll love it at 51. And overall, in my eyes, I would be a buyer of Monster here. And of course, everyone's favorite company that we've been looking at, this small up-and-comer that's been getting beaten up over the years, STEM Inc., ticker symbol STEM, listed here on the New York Stock Exchange. A lot of people are hoping that this one makes a nice rebound. And if we look here at the last couple of quarters, we can see 90 million on the beat. Estimates jumped up almost 100% to 180 million. The company posts 133, excuse me. And we can see the numbers came out. It immediately dropped down from 380 down to 230, but then it ran up to about 430 afterwards, and then has been in this downward channel basically going into these earnings. Now, we were trying to hold this level. Last time I did an update was right around here. I said if it breaks this trend line, it's probably going to trade and ride this bottom trend line down into the 260s and the 250s, and of course that is exactly what happened. And then we bounced and got back above. It tried to fight back to this trend line here today, but as you see, it rejected. Now it's sitting down here at 268, up about 4.5%, with over $250 million in revenue estimates coming in. Now, I understand that the revenue bounces around, but in my opinion, I am looking for at least 200 million plus for this quarter. And in my opinion, I would view that as a massive green flag, not a red flag. Again, estimates 256 million, market cap a little over 400 million, and the company has a billion plus backlog as well, which is why, again, look at this growth here from tens of millions to 127 million to 363 million. Now, estimates of 256 million just for this quarter. So in my opinion, of course, it's speculative. It's a smaller cap company that's gotten beaten up, sub $500 million market cap. But in my opinion, with these potential numbers coming in and a market cap of about 400 million and change, in my eyes, it might be worth it to roll the dice here, and the juice may end up being worth the squeeze. And I'm going to end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. Subscribe to the channel. That is our handshake agreement. That is how you help me, help you. More importantly, moving forward, like I always say, I want to wish everyone success. I know markets are rocky and volatile. I want to wish all of you success. I hope everyone makes a couple of dollars. Any of you jumping into these earnings plays, I wish you the best of luck. Have a good day.